What's going on, Blake?
What's up, Ezra? How are you?
Good. I'll be filling in for Alex today while he's on the road.
Awesome. Good to have you on. Welcome in.
Uh, time for
The
that
the
morning sip.
that's right. Not a better time. I was just talking about NVIDIA and how, the markets are really pricing in about a 6% implied move, 6 to 8%. I was reading, and I think the seasonality of September really hangs in the balance of their guidance on these new chips that they're putting out.
Yeah, we're gonna get into NVIDIA today with the panel. Obviously, as goes NVIDIA, so goes the market. It's like you were saying, Blake, it's expecting it to have a pretty outsized impact on everything else. What do you see coming?
Well, to be honest with you, I really I mean, I know they're going to beat. Like that's without a doubt. So I know they're going to have a great report, but I'm just worried that they're going to have some bad news for guidance
Yeah.
and if they bring up anything about tariffs, I'd be highly concerned.
Yeah,
But
that's what Jeff Smith was saying last time he was on the panel. I think Jeff's right. I think you're right. Expecting a beat, but bad future guidance and maybe some choppy waters for the markets.
absolutely. And there's Kane. How are we doing this morning, Kane?
I'm doing great. How are you guys?
Doing
Good.
fantastic.
Awesome.
Uh,
Good to hear.
Kane, I'll be filling in for Alex today while he's on the road. Good to see you.
All right, great to see you. Good. Uh, what do you, what is he up to? What?
I think he's traveling for a wedding, so he will be on tomorrow and Friday, but today he's on an airplane.
Gotcha. Well, it's a pretty good week to, yeah, everything's so quiet.
Yeah, it's a
So
great
I
week
know
for it.
I got a few things to hit today, but I've been following the Cracker Barrel thing closely. It's a real interesting story to me.
Uh,
Oh my.
I don't get it.
Didn't
I
they
don't get it
revert
at all.
back?
Well, they reverted back the logo, but I'll get into it. There's a lot of problems with Cracker Barrel beyond just the logo.
Oh gosh.
Yeah, I've never heard of a logo determining the fate of a company.
Well, I
Hey,
mean, you look at iconic logos like Apple or Nike or I think it can have a quite impact, but it can also be a band-aid or kind of a bone that management throws out there. And yeah, I'm not buying it.
what'd they do? They just removed an old guy on a barrel and everybody lost their minds?
Well, it was part of they're spending more on capex than they are than they actually make. So it's not just the logo, but it's like the store interiors and this whole big rebrand and yeah, getting away from kind of the kitschy, iconic old country store feel. And it's yeah, I mean, first off, just from a capital allocation perspective, it's a bit of a disaster because they're spending so much on capex to renovate these stores. And all the while operating I don't know how they do it in restaurants, but whatever kind of margin measurement. Yeah, Tim in the chat says kind of like when Bud Light, the Bud Light's woke moment. So
Yeah, we remember that.
what's going on, guys? Looks like we got a great crowd today. Peter, I see you in the chat. A, Adam, Al, Am, Andrea, Asha, Baha, Christopher, Craig, Kurt, welcome. Denise, Francine, Jeff, Gina, Glenn, Greg. I haven't been on in a couple of days. Blake's doing a great job holding down the floor as the moderator, but
That's
seeing
right.
some names I recognize, a lot of new names too. So, what's going on, folks? We are live, so please say hi in the chat. Let us know what's going on. Let us know what you see in the markets this week. We will get into NVIDIA. I know Kane's got some thoughts, so let us know, folks. We want to hear from all of you. Say hi in the chat. Let us know who you are. Let us know where you're tuning in from. and let us know what your thoughts are on this week's market. Let me drop our disclaimer real quick. We are not financial advisors. The content presented today is for educational purposes only and merely cite our personal opinions. In order to make the best financial decision that suits your own needs, you must conduct your own research and seek the advice of a licensed financial advisor if necessary. Know that all investments involve some form of risk, and there is no guarantee that you will be successful in making, saving, or investing money, nor is there any guarantee that you won't experience loss when investing. Always remember to make smart decisions and do your own research. Man, if I could make smart decisions every day, that'd be terrific. Not just in the markets, but I'm sure my wife would ask for some smart decisions in other venues of life as well. What's going on, Baja? He's saying rotation into IWM continues. Tebow says good morning from beautiful Cary, North Carolina. Kay says good morning. Good morning, Kay. Gina, good morning from Connecticut. What's going on? Hope you're enjoying some beautiful weather at the very tail end of summer. So, Kane, here's my first story for the day. Taylor Swift gets engaged and the market pops. Do you think they're related?
That's pretty funny.
The Taylor Swift effect. I saw some memes going around social media. People like buy stock in Huggies and stroller manufacturers. Maybe diamond rings. Are we gonna see a Taylor Swift stock market boom? Are we gonna see a Taylor Swift
Uh,
baby boom?
are they
What do
going
you think?
to? They're going to handedly populate the Earth? Is that what's happening?
I've seen people saying that. Yeah, I mean, look, I don't get it. I'm not a fan of her music, but I know she's got millions of fans and has this Travis Kelsey. So maybe we see a little move. I don't know if there's any baby stocks, of Kane. But
Well, we can start looking, but that's
Yeah.
pretty funny if suddenly we get a baby boom because of this.
People
yeah,
just
I'm
start having kids.
honestly, I have a friend who says like the biggest single bearish metric is the American birth rate. It does. I have trouble disagreeing with him. I mean, the numbers are fairly grim with the fertility level slipping all over the world, really, but
Yeah,
especially
it's
right here in
everywhere.
America.
Yeah.
Yeah.
But here's the thing, as long as we have a growing population, which not every country can claim, and whether it's through immigration or it's through natural birth, it doesn't really matter. We need to, we need population growth is one of the pillars of of guaranteeing that the S&P 500 can continue to go upwards. So there's a few assumptions that we have. So you may have heard that, oh, the stock market always goes up, or at least the American stock market always goes up. But that is dependent on one continued economic growth, which is also dependent on a continued population growth. And then it's also contingent on continuous rotation of quality stocks into the S&P 500. So we just got, what was it that just got kicked out? Walgreens. Walgreens just got kicked out, and then I forget which one they're being replaced by. So as long as we have those three things where they're continuously kicking out the underperforming stocks and they're replacing them with outperforming stocks, and you have a population growth and you have a growing GDP, then you can positively expect that over a long period of time, that market is going to keep going up. So, I mean, if they stir a baby boom, then that is long term great news.
Chris, what's going on? Good to see you. I'm filling in for Alex today while he's on the road.
Oh,
And
we
AM
got
says
Chris
it's
in here now.
Interactive Brokers is what's replacing Walgreens. So thank you for that, AM.
And we lost Chris. He doesn't
There he
like the
went.
Taylor Swift content.
He took one
Yeah.
look at your slide and he's like, I'm out of here.
He says, I gotta go.
Well, to your
Taylor
point,
Swift.
Kane, yeah, I mean, I think population growth is it's one of these metrics that's like deceptively. What's going on, Chris? Can you hear us?
He's
Test.
connecting.
Maybe his audio's connecting.
Yeah, all right, we'll give Chris. But I think, like you were saying, Kane, yeah, population growth is so key. It's one of these deceptively simple metrics, but it's like if you don't have people to sell stuff to, what do you have?
Right.
You know, it's
Yeah.
and
Especially
I
in an economy like the US, where we have over 70% of our GDP is based on consumption. If you don't have a population to consume, then that's not going to go far.
yeah, no, I mean, a friend of mine looks at these declining fertility numbers, and it's scary. You know, I don't think it's something that shows up immediately, but you know, if these numbers hold, and I know you said, Kane, you know, immigration is one way to patch that up, but it seems like most of the world is facing a fertility decline. I mean, it's not just, you know, famously it was like the third world, the developing world, where you'd see bigger population growth, which is a little counterintuitive, but it seems like it's even slowing down in places like Latin America. You know, they say there's still strong population growth in Africa, but there's a lot of reasons to be skeptical of those numbers, just the data collection there. So I don't know. I don't know. It's one of those things. It's like, how do you even invest for that? I guess hard assets.
Yeah.
So, Chris, what's going on? Can
Morning,
you hear us
morning,
now?
guys. Yeah, it was weird. I had so this is a new speaker or a new like AV setup, and I've got my headphones like plugged into my computer, so I just had to switch the speakers around. But I love the thumbnail. Taylor Swift gets engaged, market pops. Yeah, I
Do you
mean,
think we're going to get a Taylor Swift stock market boom and or a Taylor Swift baby boom? That's what I'm hearing from
oh
people.
boy, I don't even know what that's gonna mean. A baby boom. It's like how many people are gonna go out and be motivated to have babies if Taylor's pregnant? I mean, or people are gonna be this is the American style is be super selfish and like I can't believe she canceled her tour because she's pregnant. All
Yeah,
right,
I mean, she's
you build
got
her up and then you
millions
rip
of
her down because she's gonna be a mom all of a sudden.
she's got millions of fans. I don't get it myself. I don't like her music, to be honest. I'm a Lana Del Rey guy. Let us know in the chat if you like Lana. But you know,
Hey,
Taylor's I would say probably the biggest entertainer in the world. I don't know who has a claim to bigger status. So let us know in the chat what you think, folks. But the market did. I timed it. I should have done a more granular chart, but the instant that Taylor Swift engagement news dropped, the market started climbing. So Terry from
it's aggressive.
Tucson, good to see you. Tim from Northeast Georgia, welcome. I bet it's still hot there. It's in the 50s here in Colorado, so I'm enjoying some early fall weather. Um, but yeah, all right. Well, that's kind of a fun way to kick it off. But I was telling Kane before you popped on, Chris, I've been following the Cracker Barrel thing really closely. I don't know if you have, but I
Hmm.
think it's just there's a certainly an investing story here, but also this interesting cultural story of how you know they unveiled this big rebrand, this big brand refresh. It was met with outrage. The stock started plummeting. Since they've abandoned the ugly new logo, the stock is starting to recover. But can we trust this recovery? Have you guys been following this story?
I mean, I followed the logo story. I don't think a logo. When did they unveil it? Because this stock's been in decline since April of 2021. So
Yeah,
I don't think
70%.
down 70%, right?
Yeah.
Yeah. I mean, from April 2021 is down 80%. I think that we're looking at maybe a trough around the 34. I'm just going to look at the fundamentals. I don't care about a logo. Let's look at the fundamentals.
Yeah. Do you
So
want to
that
pull up
is,
the chart here,
yeah,
Chris?
sure. I'll bring it
Give
up
you the
here.
screen.
Thanks. All
So,
right. So
but
CR or CBRL, Cracker Barrel. So below the hospitality industry average. So we've got price earnings a little bit cheaper. Still earnings forecasted to grow. High level of debt. That's welcome to like most companies in the US, except for tech, I guess. Which I'm actually curious on Kane, your idea of like rotation. I think we talked about that offline a little bit.
Yeah.
I think that September is going to make for a really interesting month because one thing that we haven't talked about in a long time. Remember when Doge came out and fired like over 200,000 workers, and those workers are going to be like officially hitting the potential unemployment claims lines in September. Do we start to see like, and again, the timing of this is all really interesting, like August, September. Technically, I think the market needs a correction. I just think that the correction needs to make sure it's not violent. Like if we have like an orderly correction of maybe 3-5%, maybe a 7 to 10% correction like we had back in 2023, that's totally fine and manageable. I think if the market, gets through this NVIDIA earnings, we pop up, we poke all-time highs, and then next week we have a terrible negative non-farm payroll print or revised to negative non-farm payroll, and then you have higher CPI and higher PPI, and then you have the Fed that's going to cut rates, and everyone's going to say, you're too late, it's not enough, you only cut 25 basis points. I do wonder how violent this market could like turn in September. So we'll put a pin in that for a second, but Cracker Barrel here, this is all I'm looking at. Current price, discounted cash flow shows nothing, so that doesn't make me get excited about it. Price action wise, I would just say we're trading at 62. I might be interested at like a 35. If I go to Cracker Barrel, it's like we're below COVID lows. So, I mean, I there's a Cracker Barrel, like I go to Planet Fitness to go to the gym, and there's a Cracker Barrel as I pass that. The parking lot's always pretty steady. I'm not going to say it's slammed, but it's always pretty steady, and it's like random times during the day or the week. So, I mean, I remember I've got some fond memories of Cracker Barrel. I remember always going to the old Country Time store and playing like the little puzzle games and enjoying my country boy breakfast. It was always my go-to. It's like their steak and eggs or something. So anyway, yeah, I mean, I would consider like a $40 to $35 level. I wouldn't chase this thing at 62. I'm just not that interested. So,
so I think an interesting part of the story. So Sadlar Big Larry, he's a Persian activist investor based out of Texas. He is the biggest single individual shareholder of Cracker Barrel, and he published this really damning activist investor deck, which I thought was super interesting. So I think there's an interesting catalyst there. If Big Larry or Big Larry, I apologize if I'm pronouncing it wrong, he's the guy who turned around Steak and Shake, which is part of his holdings. Yeah, I mean, I had this deck pulled up here. I don't know how to share this properly. His activist investor deck, but really interesting stuff in here. They have apparently worst in class store level operating income margin and EBITDA. And so basically the point of this deck was to get his people on the board. But as per usual, the biggest holders of Cracker Barrel are your BlackRocks and your Vanguards. They just kind of stayed with the existing board, which has done a terrible job. I mean, I think Big Larry did a really good job with this deck. The new CEO has done awful. They haven't been able to implement just basic like standard operating procedures with these handheld, like the little iPads to take your payment. And they've just been spending an outrageous amount of money. Again, the logo is a bit of a fugazi. It's like the logo's the logo, but the logo is just the kind of the tip of the iceberg of this massive capex expenditure where they're refreshing the store. I mean, look at this. Can you guys see this cumulative change in guest traffic? I wonder what Texas Roadhouse is doing so well. But yeah, just worst in class.
Keeping those peanut jars full, I think.
So I mean, the reviews have been awful. The food quality's declined. They're spending look at that operating income margin. My gosh. So yeah, I think an interesting catalyst. Maybe you got Kane, you worked in the real world of finance. I don't know. What do you think? Does Big Larry is the largest individual shareholder? I think he owns about 15%. Does he have a shot at shaking up the board, or is he just at the mercy of the BlackRocks and the Vanguards, even with being the largest individual shareholder?
I would say, like, if he makes enough noise, yeah. I mean, the BlackRocks, the Vanguards, they want to see their investment do well also. They're not going to want to watch it just go down the drain and turn into this, this little, dumpster fire. But I think, if he brings enough attention to it, and it looks like that they are making some changes, and we get some positive growth here, then he has a shot at turning it around, I think.
Yeah, I mean, what he did with Steak and Shake's very impressive. He's making a lot of noise now, and I wonder if this big public failure of the rebrand gives him an inflection point. I mean, this is crazy stuff here. I'm trying to get to how much they spent on capex. Basically, the amount they spent on capex over the next 3 years, total capital expenditures is 600 million to 700 million. I mean, that's like nearly their
For
entire
what?
market cap.
Right. Yeah. What are they?
Like, what are they doing?
And people hate it. People want the old country store
Mhm.
aesthetic. They want the food to be better. They want it to be cheaper.
When you mess with
Um,
nostalgia, I feel like people hate it. I mean, nostalgia is like near and dear to most people's hearts, and we've got a whole generation that loves nostalgia, and it's coming back in a big way. So yeah, I wouldn't play with it.
yeah. Well, and also what Big Laurie pointed out, which I agree with, is there's big demographic tailwinds here, like all the kind of red state migration. This is a very red state culturally. Baja says, "Who cares about Cracker Barrel?" He used stronger language than that. Well, it's an interest. We're traders, we're investors, Baja. So there's something interesting here. But yeah, I think maybe to wrap up this story, the point is that I think if Big Laurie does get his board members on there, that'd be an interesting inflection point. But right now, I do not trust this recovery. I think the the logo thing is a bit of a fugazi, and there's really just the actual store unit economics are terrible. And I think, Chris, would you say you'd get in maybe a 35, so like half the current price?
Yeah, just looking at the recent support. No, so what it made me look at was compare a Cracker Barrel to a Darden Restaurants. Compare that to like Las Vegas Sands, Wynn, MGM. I mean, if you're looking at patrons, right? I mean, if consumers go to Cracker Barrel, I mean, it looks like it's cheap. But I also look at that as why is that down compared to others? Like DRI is up. I'm looking at like literally, August last year, even April this year, like DRI is at higher highs. You look at LVS, this thing has been springboarding off those lows in April. So I mean, Vegas still looks pretty strong. We're at, I'm looking at LVS if I show my screen here. Ezra, let me grab the screen if I can.
Sorry about that.
Oh, good. So
Bodine
just doing
says if they could just put in some sound insulation and reduce the congestion and keep the old timey feel, it'd be great. So Bodine, you're saying they shouldn't spend $1 billion making it look like every other boring thing on
yeah.
the market. I agree.
So if let's just go to a weekly chart. All right. As high as 181. Now it's down, 30. It's like if I'm going to take a stab at Cracker Barrel, it'd be like under $40. I don't know if the premiums are good enough to even offer something like that, but let's find out. So Cracker Barrel, what's a put? If I go out like a put to, let's say 2027, that's a long ways out, man. A lot can happen in that year and a half. But if I want to say, you know what, I'll give Cracker Barrel a shot and see if we can hold these lows at $35. So if I buy a 35, sell the 32.50, I mean, that's not a bad trade. It's a lot of time. I then own a stock that does it get turned around or does it fall back to like, 2008 great financial crisis levels, which is $20. So if I'm going to go out that far, it's, I don't know. I'd say I'd want to take probably the safer of the two. I mean, make $1.27. And if I own shares of Cracker Barrel, I'm owning it at great financial crisis lows. Like that to me is probably the safest income trade I could pull and not really be worried about owning it. The chance of assignment would be 3%. Probably the profit's 100 or 97%. Like that's probably the trade I would take. That to me is a little bit safer than getting caught up in the noise here at 35. If we have another further decline or this is like a hostile, turnaround, then yeah, we probably drop to fresh lows. If the market takes a little bit of a nosedive, then we probably have fresh lows. So anyway, the reason I'm bringing this up is look at this stock compared to Darden Restaurants.
Ooh.
Very different stock, right? I mean, so what is it about Cracker Barrel that sucks so bad compared to Darden Restaurants? I know they have more restaurants in their catalog. I mean, this is like Red Lobsters and Olive Gardens and Bahama Breeze or something like. There's like 5 or 6 restaurants in this family. And then you look at Vegas, which is always kind of my consumer. Like the healthy consumer to me is Vegas. Look at LVS, look at Wynn, look at MGM. I mean, from the April lows, other than the great financial crisis all the way down here for LVS, this thing has been rock solid at these lows for the last like decade. So anytime I've seen like $35 on LVS, I've bought shares or I've taken trades on it. So LVS was a profitable trade this year. Here's Wynn. same type of thing. Pretty good support. You know, sold some puts on this one. I think I might be out of this trade now because I was up like 90% of that credit. So let me double check that here.
Chris, could you? I think I want to take that trade. I like your Cracker Barrel trade. Could you
You
drop
want
that
to
in the
take? You want
chat?
some Cracker Barrel? Yeah, man. I'll take it with you, dude. I'll take it with you. Let's go CBRL, Cracker Barrel. So to get the premium, because I mean, $100 is $100, and if I did this on, you know, all these accounts, it'll be like $2,000. It's fine. So let's go out to Jan of 2027, which I know is a lot of time. But here's the nice thing: is if there's a turnaround, this is out 500 days. That's a long time, but it's also a 3% chance of assignment. So I would say Cracker Barrel would have to like go out of business if this is going to not work. But let me see if I can take the trade. This would be maybe I'll do one strike higher if it pays better. Wait a tick. Now it's only offered 70 cents. What the heck happened there? That's weird. It was literally $1.27 when we looked at it. Now it's 70 cents. Well, now I'm less interested, Ezra. So the
Something's happening.
2750 by 25 is offering $1 and change. That one's okay. If I went down to the $20 levels, now it's 70 cents. And now there's, okay. Well, now it's back up to $1.27. All right, let's see if we get filled. I'll try to take the trade here for $1.25. Well, I'll start a little bit higher. $1.30. It might not be super liquid. There is open interest here, but let's find out. Let's try to take the $22.50 buy put with one contract and the $20 sell put with two contracts. I'm going to try to go after $1.30, $1.25, or $1.20. If it doesn't get filled for $1.20, I'm just going to pass on the trade. But let's see. So let's go.
I'm trying to write what you're saying, but
okay, I'll type it out. Don't worry about it. Don't worry.
Okay.
I got it.
James in the chat says, "Let's take it together."
Okay, 130 not filling. I'm going to penny it down to the mid price. 129, 128. So I'd be willing to take up to 120. So I'm at 128 right now. Now it's only showing $1. I might not get filled on the trade. I'm going to go $1.25, $1.20. Okay, this is my final offer. If it doesn't take, $1.20 not filling. I'll do one
James.
more. I'm going to do one more test at 115. That's it. Like, I'm not going lower than 115 credit. Not filling. All right. So that trade isn't going to fill. If I did the 25 by 22.50, yeah, and now I'm going up strikes where I'm, maybe pulling in $1.20, $1.30 for the 25, but my probability profit goes from 97 to 93. My chance of assignment still around like 6%. Do I really want to own shares of Cracker Barrel? Yeah, not really. I mean, I kind of don't, but just go back to the stock. I don't think the way I'd really plan on managing this trade would be if price goes up, then take 50 to 60 to 70% of that profit. So if I can get $1.25, let's say, if I could pull out, $75 of that trade or $100 of that trade, that would be my probably capital efficient trade. Because if this does recover and start to go higher, then because it's getting further and further and further out of the money for my strikes, that $1.25 credit would start showing, 90 cents debit, 80 cents debit, 70 cents debit. So if I could get this all the way down to like 40 cents or 30 cents, I'd just take the profit. I wouldn't let this go. I don't want to wait on this trade 500 days. So most likely I'd check about the halfway point if this stock isn't going lower. But what's kind of nice is there would be like a 250 profit trap on top of that. So you could potentially make, if this trade does fill, yeah, this is just a super wide bid ask. I'll try one more. I'm willing to throw this trade in. I don't love it. I love it less than the $20 strike, but for the sake of, it's still a 93% chance of profit. I'm going to take this on one account, not all accounts, but let's go $1.30 Cracker Barrel and see if this thing will take. Well, that filled instantly. So I got filled at $1.30 on that trade. I'm going to take this on one other account and see if I can get a better fill because I feel like that was almost too easy. So similar. Let's go another account here. This one. So I'm going to try $1.50. See if we get lucky. I mean, I'll just get greedy. So $2 not filling. I'm going to go down by like 25 cents. $1.75. So if I can get filled, I'll share what hopefully is going to be like the best fill. $1.60. And it might, I have to take the same trade at $1.30 again, but at least it doesn't hurt to try. $1.50. Okay, $1.40. All right, I'm right back to where I started. I'm going to go $1.35. And back down to $1.30. See if I can get filled at $1.30. Now this one's not filling. Interesting. $1.29. I must have popped up on Big Lars' radar. They're stealing up all my ratio spreads now. All right, 125 hopefully can fill. I got filled for $1.30. Now I can't even get filled for
you freaked out the
$1.25.
market maker.
I think I did, man. Yeah.
I don't think he was planning on transacting today.
Yeah, right. All right. Well, I'm in the trade, but now it's going to make things like I'll try one more at 120. All right. So I got filled at $1.20 and $1.30. So I'll type it out and say hi to my dog. Let me get the chat up here. Chat is here. Sorry if he's taking my microphone noise. Okay. So Cracker Barrel, CRBL. This is a 115 of 27. So I'm going way out there for a 500+ day expiration, but I'm buying the 2750 put with one contract, selling the 25 put with two contracts. I got filled for $1.30 credit on one account and $1.20 credit on one account.
LDM in the chat says, I'll wait till everyone else is done, and then I'll get filled at 140.
There you go. That's good.
Our trades.
That's opportunistic for Larry. Yep.
Yeah. All right. Well, I think thanks for that, Chris. That's great. And I just think it's a super interesting story because there's these culture war elements. There's the activist investor. There's all the fuss about the logo. So, we'll get moving on to some other topics. You guys in any crypto right now? Any thoughts on this recent Bitcoin recovery?
I listened to a podcast. Kane, do you know the name Warren Pies? Is that name ring a bell from 314 Research?
It's familiar, but
okay.
I can't place it. Yeah.
So one thing that is, I mean, I have Bitcoin holdings. I'm an IBIT, FBTC. I've got naked puts. I've got long shares. I've got crypto holdings and cold storage stuff. Like I've been in crypto for a while. I think, and I'm trying to be optimistic here. I think that Bitcoin, I'm not going to say crypto. I'm not going to say meme coins, fart coins, stuff like that. I'm talking like Bitcoin, Ethereum, probably about my catalog or my portfolio is going to be that. Like I dabbled in Litecoin and Batcoin and Gemini and some other stuff back in the day. I'm just in Bitcoin, Ethereum right now. I am a little concerned with the financial engineering products that MicroStrategy is putting together. So like Michael Saylor and that whole idea of like, and it's nothing that Wall Street hasn't done in the past, but if people are just like parking real, like, I mean, the market cap of Bitcoin is now like $2 trillion. And I think that's enough to potentially make some risk out there where it can be, I'm not going to say it's systemic because I'd like to think that the opportunistic person in me, like the glass half full, is that this is a catch-up trade that can help people, game the system a little bit faster than just passive buying and holding. Indexing for a while has worked very, very well for the last 20 plus years, certainly the last 15 years. The retail crowd, the retail community, the buy the dip community has been paid very well over the last 7 years. I mean, every major dip we've had, if you bought that dip, it rips to all-time highs and V bottoms. Aside from 2022 when it took 9 months to start, carving out a low. But the catch-up trade, in my opinion, would be, Bitcoin's trading at, $110,000, highs this year, like 125, 126, I think. I mean, the opportunistic story is that we go to 500,000, we go to 1 million, and we can 10x our money. It's like, that's awesome. I'm hoping there's a catch-up element there, which is like, if people felt like they've missed out in the stock market over the last decade, that putting a safe stake, like if you can swing like a $5,000 investment into Bitcoin and it can become 10 times that, if you can put a $10,000 stake into Bitcoin, it becomes 10 times that. That type of catch-up trade to me would be like, it would be like this like amazing equalizer to say, look, I didn't participate in the NVIDIAs. I didn't participate in the S&P. I didn't have the money post-great financial crisis to throw it in. I've just been working my tail off, living paycheck to paycheck. But I can put $3,000 or $5,000 towards this, and I know it's a YOLO, I know it's an all in, but it's like if I lose $5,000, I don't go broke. But if I take $5,000 and turn it into 50 grand, that can help my family, that can help my my situation. So I'm hoping, like I said, the optimist in me, I'm hoping that that's what crypto ultimately is a catch up trade. And in a way, the more like insidious side of crypto is like, is it a giant hedge against the fiat system? Maybe. Is it a hedge against like the giant debt bubble? Maybe. But it's all tied together. I mean, I think that you can't have Bitcoin go higher without the S&P and the NASDAQ going higher as well. I don't think you can have Bitcoin go higher without, risk appetite. But now that there's a bigger market cap, I guess it depends on if people want to like vacate bonds and go into gold and silver and Bitcoin. Is it that mainstream now to have that type of, like, I mean, you throw BlackRock in the ring with IBIT, it's like they've got skin in the game, but these financial engineer products of like yield max and just aggressive selling calls, and you're suppressing volatility on Bitcoin. Either one, we get the squeeze through those levels and it flips those positions for like the faster, more aggressive rallies, or we just see like the volatility on Bitcoin die down and it all of a sudden becomes a weird, like a weird leading indicator where, Qs go up, Bitcoins go up, but Bitcoin kind of led that charge. Bitcoin's been turning over a little bit. Qs have turned over a little bit. I don't know. I think I'm just rambling here, but I think they're tied together. I think that it's now become big enough and more mainstream that I want crypto to do well. I just don't care about Fartcoin. I don't care about the meme stuff. I don't care about the chasing. I don't care about, mining. I just like the spot price. If gold can go higher, I hope Bitcoin goes higher too.
So I'm mostly out of crypto. I've got maybe 8 grand in Solana, which I did well on. I did really well on the first Ethereum run up a few years back. I was very unsophisticated investment approach. I'm like, Bitcoin's already so expensive. I don't know, it's 9 grand then or something. So I bought a bunch of Ethereum, and that actually paid for the down payment on my first house. So I'm very partial to that. But I kind of got out after that big win, and yeah, I feel underexposed now. I'm kind of tempted to just, whatever it is right now. I think about 111K, just drop that full 111K in and just, even into IBIT or something, but just feel like I own one Bitcoin. But that'd be, even, I'm doing pretty well, but 111 grand is a lot of money. So I don't
It
know.
is.
Let me run. Yeah, to me it is.
No, it
To
is.
most
It is. And
people,
also,
yeah.
I mean, but the nice thing about IBIT and for my opinion is, for the accounts that I'm trading, if I can trade IBIT, it's essentially the closest correlator to the spot price. I can also buy protection. So, I mean,
Right.
I'm hoping that like through the peaks and valleys, like even if we pull back 10, 15, 20%, maybe the market pulls back 5, 10, 15%. That's fine. But at least I can ride some protection down to like lower the cost basis on my IBIT position. And if we ultimately do go to 200,000 Bitcoin, 500,000 Bitcoin, 1 million plus Bitcoin, well, that's going to put IBIT up to, $600 a share. So if I can ride that out and just like protect the downside, it's like, I know I'm going to sacrifice some of those gains, but I'd rather pay that insurance, every 6 months or every 12 months. And if we get a flush down, like I'm riding that thing for, maybe 80% protection, maybe 80, 90% protection. I'm not going to time it perfectly. I know I'm not, but if I can sacrifice minimum, protect the downside and just hopefully get some upside appreciation, I think that's to me like a pretty safe way to play. And again, with risk capital, my allocation to Bitcoin, I did the numbers. I think I'm only in right now. Oops. I've got about a 3% stake in Bitcoin for my accounts. And I mean, personally, I've got more than that. Like personally, I'm closer to 10%. Like my allocation is about 10% Bitcoin. But for my other accounts, it's like 3%. I don't need to take huge risk. I can always make up 3%. If I lose and Bitcoin's a huge freaking scam, and I don't think it is, but it's like, you never know. So a 3% allocation, I was always drawn to the idea that if you had 1% allocated to Bitcoin since like 2012 or 2013, that 1% allocation has allowed you to double your S&P gains. So you could have 99% S&P investments and 1% Bitcoin, and you could still double your S&P performance. Like that to
Of
me is
course,
pretty darn
that
impressive,
course, that ship sailed a little bit, but yeah, I could see it. I'm not saying it's by any means guaranteed. I could see $1 million Bitcoin. Let me run and we'll move on after this, but let me run an interesting theory I saw by you guys. So if you know about the stable coins that are pegged to the US dollar, that's becoming a big thing. And President Trump is so big into crypto now. And I read an interesting theory that so these stable coins, basically people put money into them. They're pegged to the US dollar. It's supposed to be, you buy $1 of these cryptos, it's worth $1 US. And the way that stable coins maintain that is by buying treasuries. So I saw an interesting theory, like the government's like real in favor of these stable coins now because it absorbs treasury issuance. And that might explain some of Trump's like big personal moves, his family company moves into crypto. What do you think about that as the treasury absorption theory of stable coins?
I
I think
think
it's
it's
a
yeah. Go ahead, Kane. Sorry.
well, there has to be buyers of treasuries for the
Yep.
U.S. to continue to spend, right? And the U.S. is not planning on reducing, despite all the Doge and all that. The U.S. is still growing their balance sheet, right? So
Yep.
we still need a source of buyers for treasuries. At some point, maybe a couple decades ago, we started holding treasuries inside of Social Security, right? And so the government does look for these creative ways of finding different pockets where they can hide away these treasuries. So absolutely, stablecoin is a way for them to find a new pool of buyers for U.S. treasuries that'll prop up the U.S. dollar for a while, or at least the U.S. economic system. I don't think the goal is to have a strong dollar. It's actually probably the opposite. But what that doesn't necessarily translate. Oh, crypto is amazing. Crypto is going to be this wonderful asset to be in. I think Chris nailed it on the head where he said, "Hey, I'm interested in Bitcoin and Ethereum and just about maybe nothing else." So right now, what's happening is if you're in the altcoins or you're anything but those top two, what I liken it is to the .com. So basically, after 2000, the .com bubble burst, and all these hundreds and hundreds and hundreds of companies that didn't really have any real value in the market, they disappeared. And then the Googles, the Amazons, the Yahoos, those they stuck around because they actually had value inside of the market. Same thing's happening with Bitcoin and Ethereum and all the cryptocurrencies. What we have to recognize is that this is a brand new asset. It's an asset that did not exist. It was invented in 2008. And that's really not that long ago in the lifespan of assets. And the same thing happened in .com era, right? The internet was this brand new thing. All these companies were getting in on it. It was a brand new asset. Early adopters were who? They weren't the Wall Street. It couldn't be Wall Street because there was not enough capital there. So the early adopters are all retail guys who saw this vision and they had this belief and they bought these little tiny stocks and they made a killing when Wall Street started to pile in. But when Wall Street started to pile in, they could only go after the ones that held real value and the ones that had enough market cap. So if you look at the market cap of all the coins, the only ones that have sort of close to enough market cap now is Bitcoin, and Ethereum is starting to catch up. So what I believe is that we're entering the new phase. We're entering the phase where the big boys take over, institutions come over and say, this is not your sandbox anymore, retail guys, we're taking over, and we're going to do things our way, which includes the financial engineering games that they're playing. So that they can move assets, because a lot of these institutions, they can't move assets into just regular Bitcoin. They have to figure out some sort of way to make it acceptable for the rules of their funds in order to move money into these assets. So what you're seeing is this new phase. All right. So now institutions are taking over. All these altcoins are going to disappear, and Bitcoin and Ethereum will still have a place. But it doesn't mean that every crypto under the sun and all these stable coins are suddenly going to be super valuable. Stablecoin, by definition, is just going to be as valuable as the US dollar.
Now, I will say I do like Solana in third place. I think that that is obviously a risky play, aggressive play, but I do think it has a credible shot at dethroning Ethereum as the kind of silver to Bitcoin's gold. And the one thing I know, Chris and I agree completely. You don't want to get into the silly meme coins, the fart coins, these
Yep.
1 in a million lottery tickets. But a lot of those are actually built on the Solana blockchain. So something that appeals to me about Solana, it's a bit of a picks and shovel. Like you don't have to participate in that meme coin mania, but it is out there. People are having fun with it. Some people are hitting those lottery tickets, and if Solana is powering a lot of that, and Ethereum does too, but I do like Solana as kind of the third place crypto. I don't know what you guys think.
So here's a question for you, Ezra, because I'm not familiar enough with how the Solana and Ethereum work as a platform for other cryptos. If the other altcoins and meme coins, if they just disappear and and Solana is their backbone, does that affect Solana?
Yeah, it's a fair question. I'm not a crypto expert by any means, so I don't want to speak out of turn. I mean, certainly it would suppress demand. Like, if you want to build one of these meme coins on another blockchain, Solana and Ethereum have been the go-to. So as individual ones die, which they do all the time, these hypey meme coins, it's not a big deal. But if sort of the overall market of the meme coins, that would certainly suppress demand, for that utility as being a blockchain you can build other cryptos on top of. So I guess what I'm saying, if like that sector of meme coins collapses, which certainly it's extremely volatile, but as long as there's kind of new ones coming on, it'll be fine as old ones fall off. But yeah, if the total demand for the meme coins collapses, it would certainly suppress the demand and the kind of utility use case of these crypt of Ethereum and Solana, which can be the backbone for them. Yeah, Tim in the chat says too much volatility for me. Certainly
Yeah,
wouldn't
and
blame that.
I think that's why the most important takeaway from crypto and anything is that it's risk capital. I mean, when I first started dabbling, like my first trade in crypto was not Bitcoin. My first trade was in Ripple, and it was when I had a friend of mine that was in Qatar that I sent money to, and he bought a stake for me, and I think I took like $1,000 and turned it into like 10 grand. That was like amazing, but also I'm like, I don't even know how it happened. It was on Kraken, which I'd never used before. I'm like, this seems really shady. And it wasn't until like 17, 18 that I started to start to participate when
Did we
I'm
lose
not
Chris?
buying here. I'm waiting for Bitcoin to fall after we hit 20K. That was when they built the futures market, right? So I'm trying to go Bitcoin here, 20K. That would have been, 2018. So my trading in Bitcoin would have been after we peaked just shy of that 20K mark I remember I was in Orlando at the time. And it was running from $3,000 all the way to 20K. And it did that in I don't know, 3 or 4 months. And so once we hit 20K, we came right back down to that $3,000 mark. That was where I first bought Bitcoin for the first time.
That's good. That's a
So
good entry
it's been
point.
a good trade. I'm not going to lie. It's been a great trade. However, 3K up into the 50s and 60s, I did take a big chunk of profit. At that point for me, it's like I made enough in it, fortunately, that it was like risk capital. I was willing to literally risk the entire amount that I put into it. And after that, it was enough from okay, well, now it's preserve it, manage it like an investment. Now I'm going to take, 3%, 5%, 10%, make it a part of my portfolio allocation. And now it's something I can manage. And, as the story has grown and has become more mainstream and the optimism is there. I mean, what's funny is you look at the fence of Bitcoin, it's like the crypto space. It's like some people just not everybody understands it, and it's pretty darn complex stuff, but it's also in the simplest terms, if you take it from a trader or investor perspective, if it's risk capital, if I was going to put 2% of my entire portfolio into Bitcoin, that could potentially annualize 20% a year, 30% a year, which sounds insane because it kind of is, but that's what it's been doing. It's done very, very well the last 10 plus years. The question is it going to sustain that type of run? Or now, like Kane said, more institutional side is into it. There's more sophisticated products and structured products around it. Maybe it just becomes a feeder. Maybe the crypto space or the Bitcoin frothiness becomes like a feeder for basically making stable coins like a giant money market. And it's just going to force these treasury buys, which is what the US needs to kind of continue to grease the debt wheels. So I think that there's a lot of sophistication, intelligence behind it. I just hope that the whole thing doesn't turn into be like, we got too greedy. Like, for example, Trump making his own coin, it really bothers me. Melania making a coin, it bothers me. Like that, if that's not like screaming corruption at the top of the power of the United States, I don't know what is. It's stuff like that that makes me concerned that it just becomes like a platform for just pump and dumps. And I want there to be more like legitimacy around it. So I'm hoping we can get rid of a lot of that like messy stuff and make it more legitimate, where I
Yeah, we need.
don't think we should have like the US Treasury linked to something that could potentially implode or potentially like collapse or go away. And if it gets, too greedy too fast, or you force it, like you force people into having exposure, it's like deleveraging, and any type of deleveraging move, all that goes away. Case in point would
We
be,
need.
sorry, like the one trade I'm watching this year that I think we have to have on the radar for the next couple of years is, if you do you have a trade view chart up, Ezra? Can you pull up dollar yen?
I'll let you do it. I'm not as chart. So I was just gonna say, we need to get back to the roots of Bitcoin. Forget these pump and dumps. We need to go back to buying hard drugs over the internet and
That's
hiding
right.
your assets in a
Silk Road
divorce.
Bitcoin. That's what we need it for. Yep, exactly.
The core original use case of Bitcoin.
So this chart, I mean, I've traded currencies for a long time, and the dollar, the yen in general has had an incredible, I mean, since it really became like the crazy basket, it was from 2008 to now. Some of the stuff that yen has done as a basket has been like, it all of a sudden, like the reason I love currency so much is they're usually very efficient. When it goes up, it pulls back. When it goes down, it pulls back. You trade a lot of efficiencies. I love pivots in the currency markets. It's like a pure technical market. But the Japanese yen is like 10 months out of the year is technical, and 2 months out of the year is completely irrational. And those irrational windows that the Japanese yen is moving can be so one-sided that it is like a landslide of profit or a landslide of losses. And it just depends on what side you're on. So I've had some close calls with the Japanese yen in my career. I'm watching this chart. This is the dollar yen on the weekly. I think that this is something we have to keep an eye on. There is a potential head and shoulders pattern that if we break 140, this measure move gets us down to 120. Okay. This move, in my opinion, would be a monster deleveraging like we saw back in 2024. Now, 2024 in the stock market felt like maybe a 20 to 30 day deleveraging, because we saw like an 8 to 10% dip from like mid-July of 2024 to like August 5th. Okay, that was it. Like we experienced like a 3-week decline, and then we bottomed and we went back up through, September, the rest of the year. The yen, however, I mean, the dollar yen went down 2,000 pips in that same like 30-day window. And I just wonder if this structure here, the Japanese yen, the Bank of Japan, is the only central bank that is not cutting rates. And I wonder how aggressive the Fed gets over these next 12 to 16 months. If we are going to cut 5 times into the end of 2026, that's going to bring the official cash rate down in the short end, probably 1.25% ish. But the Bank of Japan is going to be sitting at plus 0.5. So the US could still sit around like 3 to 3.25%, but the Bank of Japan could be sitting at maybe 0.5 and possibly raising up to 0.75, maybe up to 1%. And I do wonder if this whole idea of a low volatility carry trade unravels. And this is another kind of like outlier risk that I'm watching in the overall markets. As a currency trader, this could be an incredible opportunity. I just don't know if it's going to be chop fest for months to come. And then eventually when the deleveraging happens, we're back up here at 158, or we're back here to 160 and change, and then the thing drops all the way back down. This would be resistance. If you break this support level, you double that move. I mean, if we went from 160 all the way down to 120, there is an absolute fortune to be made in that trade. But it's not going to be good. Like if we go from 160 to 140 or 160 to 120 on the Japanese yen, I mean, one standard lot would pay $40,000 in profit. But the problem is the equities market could also show, if this, I'm getting a little doodly here, but if this was a 10% correction in the stock market and we did something similar where we did that, I mean, we could have a 20% correction in the stock market. So it doesn't come without having risk elsewhere. So as much as I like this trade, part of me doesn't want it to happen, because if this just grinds higher, then we can just keep this wall of worry going. But if eventually this thing turns and offers up that type of risk off mode, I mean, it's a great trade in currencies, but look out for potentially a big correction coming in the stock market. So I don't know. It's
40
out there. It's
grand
out there.
payday would make that feel a lot better.
Well, a 40 grand payday
So-
might have to serve the purpose of hedging for being down in your
Right.
stock portfolio, and that's, I mean, like 2019 or 2022, for example, if it wasn't for currencies, I would have had a pretty struggling year. Like I was up about 19.5% 2022, which is pretty good considering the bear market that we had. But a lot of that was, we had an inflation trade early in the year. Like Q1 was all about energy and inflation. I made a lot of money that first quarter, and then I just battled the markets the rest of the year. And then currencies like took off. I had good trades running on the yen, good trades on my Swiss pairs were doing okay. So long story short is like I grinded out positive gains, but it wasn't easy. It wasn't easy when the market's in a 9-month bear market. So anyway, just putting it on the radar, like this whole idea of like, we're the last central bank to be cutting rates. We're cutting, probably in September, and through 2026, we're probably going to have, I would say, 4 to 5 cuts. I don't know how juiced the market's going to be. I mean, if Powell cuts by 25 points and then another 25 points, I don't think the market's going to blow the top off. But if for some reason like Powell leaves in 2026 and we have just like a sycophant Fed chair that is going to cut another 50 basis points, or we start to just, really drop rates aggressively lower, I don't know if that's going to be like a crazy blow off top that's like pure melt up. But it just gets bubbly, man. I mean, markets will not go up forever. They won't go down forever. And the John Maynard Keynes famous saying is they can stay rational longer than traders remain solvent. So I get that. I think a correction is still going to happen. I made this claim today. I made like a little proclamation that I thought, okay, in the next 60 days. Okay. So what's 60 days from now? Let's take a look at an option chain. 60 days from now is going to be October, like near the end of October. By the end of October, I believe that my 50-day moving average is going to get hit. So, and again, I could be wrong. Okay. But Kane, you can back me up if you support it. But do you think that in the next 60 days, we will at least make a pullback to this 50-day moving average?
Oh yeah, and the longer it takes, the easier it is for that to happen, because you can see that 50 going higher and higher. So yeah, I think it's almost a foregone conclusion that that's going to happen.
Right. And the hard part is timing. But I'd say right now, because we have this window between, I think the biggest seasonality windows for corrections is February to April and from August to October. That's usually like the weakest spots in the markets. And we have a lot of stuff that's coming together in September with non-farm payroll. If we don't have a good delivery, if we have like another terrible revision and we have a low number, it's gonna trigger like this concern that the job market is getting worse and softer. And yes, the Fed is cutting, but it's maybe too late, maybe it's too slow. And my concern with the job market is once we start to see, like right now, tech is not hiring. Tech is all in on AI. They're not hiring. We have jobs in healthcare and services right now. If those are starting to lock up as well, and we have government jobs that have been cut that aren't coming back either, I mean, the unemployment number could get pretty bad. The unemployment rate could grow pretty quickly. That's enough to scare. I mean, we're 70% consumption, like you guys said. It's like that's enough to scare. And again, just the optics of it. If we all of a sudden we see people that are losing jobs, the unemployment rate ticks higher, it's gonna slap the market a little bit.
And just to put an exclamation point on that, Chris, because I think it's such an important point. I saw a stat that almost all of new jobs added recently were in healthcare education. So I don't want to go so far as to call those like parasite industries, but like those are industries that can only thrive if like the real economy is working. So that makes any plausibly good job numbers a whole lot worse when you consider that it's all. And this is again to tie back to our fertility crisis discussion at the beginning. This is an aging population. This is but yeah, just getting hiring in healthcare and education. Like you need people to pay for that healthcare and education. And if there aren't jobs, especially in tech, like you said, I have 2 friends right now, very qualified graduate degree tech friends who have been out of the, one just got laid off, another one left his job about a year ago, and they're both totally frozen out. So yeah, Greg in the chat says tech is not just not hiring, They're laying off massive positions due to AI.
Yep.
Yeah,
And it's been happening since 2022. I mean, honestly, after the correction in 2022, tech like has slowed hiring in a big way. Now they're just not hiring, and they're also cutting. Like, it was not that long ago, a couple months ago, it was announced, like, I think was it 4% of the global workforce for Microsoft, or like 8% of the global workforce for Microsoft? Some of these layoffs in like Meta and Microsoft have been pretty big. So it's probably not going to change. Like, that tech side is going to be like, do more with less. They can do more with less, but they're all in on the software side. And I listened to some interesting podcasts this last weekend. But the tech side, the software side, might not be as great as everybody thinks when it comes to, maybe the better AI play is like the industrial side, the physical side, the, getting. I mean, I'm gonna throw it out there. I don't know how you guys feel about Tesla, but I think if there's either Michael Saylor becomes our first trillionaire or Elon Musk becomes our first trillionaire. I think that if we're going to have autonomous vehicles that are far superior to Waymo right now, like Tesla's probably the cutting edge in autonomous driving. I would not put it past any Tesla factory to ultimately have like humanoids working there, whether it's with people or without people. And I know it's terribly bleak and it's super depressing to think like we're just going to have factories and companies that just do everything and have these super high profit margins and have zero human labor. But that's great for profit margins, and that's great for investors. And it could be like this ridiculous run that I don't want to short. So honestly, I put a trade on yesterday for my Project Options Edge. That was Tesla. And I think it's a good trade. I'm not even owning shares. I'm just putting in a couple of ratio spreads that I got paid $1,025 on. There's about a 94% chance of profit. And if I own shares of Tesla with any type of assignment risk, it comes down to like an ownership of 234 or 204. So, and if you look at the chart on Tesla, I mean, that would be basically giving back all of these recent gains, right? So we'd have to see. And I honestly like the structure of Tesla. I think if this is any type of reversal pattern, fortunately, this is one of the Mag 7s that hasn't been blistering to the upside yet. And if Tesla is going to, continue to consolidate here, I think this is all accumulation. I think if we start going higher, I don't want to get in the way of that run. I think that'd be a fun ride to take if I'm getting paid on this. So, options down here, I've got some ownership. I'm selling cover calls. Some of it's already in the money already. But as far as adding more exposure, I'm starting out with a trade that's not super expensive. If we go higher, it just gets easier. If I have an allocation that I can hold, I like all-time highs and higher. If you're willing to maybe ride Tesla out for the next 2, 3, 4 years, I think we have $1,000 profit target. It's not that unrealistic.
well, and Tesla almost has this like white swan risk to the upside. Like if he cracks this Optimus robot thing,
Yeah.
like you said, if he really cracks autonomous driving, like, yeah, I like that a lot because there's certainly significant risk to the downside, significant volatility risk. But
if he stays out of politics, I think if Trump, if Trump and Musk can get along, and Musk stays out of politics and he doesn't form an America party or America's party next year or whatever he wants to consider doing,
it
I think
seems
if
like
he sticks
that's
to,
dead in the water.
I mean, for the sake of like Tesla stock, because Tesla represents more than just an automaker. Tesla represents all of Elon Musk and all of his randomness. It represents like the private equity side that people can't participate in. If you want to invest in SpaceX, and you can't, like, it's private equity. And so Tesla's kind of that exposure, even though it shouldn't be, but it kind of is. And everything that Musk has his hands in, it's kind of reflected in Tesla. So it's been volatile for that reason. But at the same time, like, I think Tesla's not just an automaker. You've got the AI side, you got the autonomous vehicles, you got humanoid robots. You'll have like the crazy AI shift in profit margins that everybody's chasing, everybody's optimistic about. It wouldn't surprise me if this is one of the better plays moving forward. So I do like Tesla from that standpoint.
We've talked about a lot of fun stuff, some crypto, a play on Cracker Barrel, on Tesla. But Chris, I think you got a training teed up just for some good old fashioned income plays. Put some money in your pocket while we're riding these crazy news cycles.
Yep. And let me, and so before I go into that training, Ezra, this is one really good way to think about it. Okay. Let me get a cleaner chart on here. I've got like some blank workspaces that'll be easier to read. So basically on every weekly candle, okay, I've got 2 core strategies that I teach in my waterfall income. And through literally all of this year, okay, through all of this year, even going back to like 2021 into 2022, if every week that I started trading, I give myself a 15% buffer. So we start the candle trading here. I go down 15%, I get paid. I go down here 15%, I get paid. I go here, I go here, I go here. Every candle, I can take, you know, a buffer, give myself, oops, I drew that wrong. Every candle, I give myself a buffer. I'm getting paid on a lot of these trades. All right. Now, it's not perfect, but this is a strategy that has had one loser in 13 years.
That's awesome.
It's not bad, right? And that
I
one loser is defined risk. So it's not like we blow up our account because we took a loss. It's like it's one trade that sets us back about 5 or 6 trades. But if every week I could set up a trade that gives me a high probability of income and income, and I'm willing to take the trade typically like every week. It's going to take some buying power, but I've been doing this for managed accounts for a while. And even right now, it's like I am so cautiously bullish on this level. Like I think the market can stretch higher, but we have to have some type of pause or pullback. I'm hopeful that we have at least some technical obedience here. But even if the market's going to pull back to this level before we go higher, or pull back to this level, I'm trying to give myself about a 15% buffer. So from right now at these current levels, which is pretty much testing all-time highs right now, if I go 15% lower, okay, the S&P would have to drop down to 5,500 in the next like 60 days, the next 70 days, the next 80 days. The odds of that happening are pretty slim. You know, I mean, usually we see like every 3% the market gets bid, every 5% the market buys the dip, 10% the market gets a little bit scarier, but we still buy the dip. Yes, we had a correction to 20%, but that was a rotation on top of a systemic trade war concern. I think right now it's just like more melt up, stay out of the way, give yourself some margin for error, and see this market either chop around or melt up higher and still get paid on some income trades. So if the idea of every week we started trading, just giving yourself a big fat 15% margin for error with a risk defined trade, pulling in anywhere between, you know, $100 a week, $500 a week, $1,000 a week, we can scale it however we need to because we're trading liquid instruments, but we can set it up for income. And this, it has a super high win rate. And, you know, I trade a lot of stuff. I trade 0DT. I trade all sorts of timeframes and all sorts of strategies. This is one of my favorite, like passive income and will be like my kind of forever retirement strategy. It's not a terribly difficult strategy to learn. It's just about reward and risk and how we place these trades. I do this every Monday with my traders, Mondays at 12:30 p.m. And so just, I want to give you that visual of like, if we could step into the markets on Mondays, trade the same time each week, and we give ourselves about a 15% room for error. And if we want to, when the market actually dips, we can give ourselves like 20 to 25% room for error. There's a lot of forgiveness in this trade, which means our win percent is super, super high. Okay. So I just want to give you the visual there.